So basically, the duty on automotive parts is about 25%. So for the auto component industry, vis-a-vis some of the other countries which are exporting, be it Thailand, Indonesia, Vietnam, places like that, we are at a disadvantage because our rate is higher than theirs. They are 90, we are at 25%. Uh, so auto is per se one of the relatively, I would say relatively less affected uh, businesses in terms of relative competitiveness. I think the challenge which is there for industry is more broader around the employment generating sectors of industry, be it textiles or leather or garments or gem and jewelries, or even engineering and electrical parts, all of which uh, with the surcharge, the Russian oil surcharge, their rate will be 50% plus. So one general belief is that at least that surcharge should drop off. The hope is that that drops off sometime, and towards that, I think if if there is some resolution of that matter and it comes down to 25%, still there'll be a disadvantage vis-a-vis other countries, but at least it is a manageable disadvantage. Because a couple of things that need to be looked at when you look at this is that the sectors which are affected are employment generating sectors of the economy to start off with. Secondly, there are also a lot of China plus one resourcing which took place, and when the China plus one resourcing took place, it was largely US bound resourcing. So having fought so hard to win this business as a country, of course we understand the government's compulsions. It's important that we ensure that the oil security of the country is taken care of. It's also important that we take care of farmers, and we're not asking for the government to necessarily compromise on these things, but the surcharge, at least I feel that there needs to be some kind of resolution of that at the earliest. The other things, if of course if our competitive situation is improved, that will help. We have to bear in mind that if you look at the global economy and you say that the world is our market as a country, we are pretty much excluded from China because they're more cost competitive. And if you don't have the US, that takes out the two largest blocks in terms of trade. And then you're looking at a much smaller pie. It is an adjustment, no doubt, but let's hope it doesn't amount to something like complete exclusion. Even with the 25% duty structure, at least we'll have to absorb a little bit, but it's something which is manageable. Yeah, as a company, if you ask me, we have about close to 500 crores worth of export to the US.
Sure.
So there's been, it varies from customers. There's been some extent of sharing which is being done. So it is also a little bit of absorption. But that said, first quarter we did quite well on exports. We actually had a 25% growth.
Correct.
And the 25% growth didn't happen on its own. It's been things that we've been working on for 2 or 3 years. Even so much as that we still hope that we can show growth in exports in the current year vis-a-vis the last year, despite all these disruptions. Most of them it is not an issue, but when the rate went up, they said we will only agree if there's some sharing of some sorts. It's a negotiation.
Okay. So hard negotiations.
Yeah, it varies. Not everyone is having to do it. I mean, in our case, to a certain extent, we export and we import into the US. So we are selling there. In the sense that we sell out of a warehouse to our customers just in time, that type of vendor managed inventory. So to that extent, we are affected, but otherwise. So broadly speaking, in the first quarter, we had let's say we had about 140 odd crores in the US, we had about 90 crores in Asia, which is really Japan, Korea, little bit of China, Thailand, Indonesia. We had about 80 plus crores in Europe area. We had about 70 crores in Latin America. So broadly, that is the breakup of our exports. We are, winning business, which should probably start reflecting in the second half of this year and also next year in Europe. So there's some business that we're winning there, but by and large, our strategy, a lot of the new business that we had won was in the US, and we are not moving away from that. Yeah, the China plus one strategy came about when both US and Europe started seeing China limiting supplies of items, mixing their economic trade policy with their foreign policy. When that started happening, then people said, okay, we need to de-risk. But the India phenomena, which is what Trump announced, much to our surprise, relatively recently with the surcharge, is a relatively more recent phenomenon. Immediate impact will be limited, but if it prolongs for a longer period, it will have a significant impact. Not so much on my industry, but I would say probably more employment generating industries, as I mentioned, would have an impact. So I would broadly say that, while I would not, even suggest or feel that I'm qualified to suggest that the Indian government compromises, but if there is some settlement of some sort, at least of this additional 25%, I think it will bring a lot more comfort and security to exporters who can then plan their business in a better way. That said, the government is right saying that we also need to look at de-risking our portfolio. Yeah, I think it's changed quite dramatically. So if you look at it, we are typically seen as a commercial vehicle wheel manufacturer. So last year, if we look at 4,500 crores, 900 crores, say 20% was CV, commercial vehicle. So we are seen as a commercial vehicle manufacturer because that has traditionally been the case, but it's only 20% of our sales. We would have probably something slightly less than that, which is our export in the tractor segment. If we look at the construction, so the tractor segment would be about something like 800 crores. Our construction equipment segment would be maybe about 600, 700 crores. So these two put together is 1,500 crores. And actually, if you look at the global market, both tractor and construction, we are the largest manufacturer in the world. In terms of number of wheels that we supply this segment. Of course, Tractor India is by and large the largest tractor manufacturing country, so that automatically flows. But on construction, we are large because we've been exporting construction wheels since the 90s. Yeah, we've added a lot of segments. So if you look at the company, the company actually is not very well understood because around 20% comes from construction, maybe about 18% comes from tractors. Then you have construction equipment wheels, which is about 700 crores.
Yeah.
And then you have about 400 crores, which is fabrication and hydraulic cylinders for construction. You have air suspension, which is about 500 crores. And you have windmill related parts, which is about 500 crores. Yeah, we've done reasonably well. See, we have basically two businesses. We make about 85 different parts on a windmill.
Okay.
And a lot of it is either exported or meant for export. That is, we sell to an entity in India which exports it. Okay. So like a customer would have a module factory, and we would supply to the module factory in India, which would then export it to the US or Europe or wherever. Yeah, so if you, the first quarter was reasonably good for us. We had fairly good growth even in terms of revenues in the first quarter. Second quarter is a bit slow in terms of top line, but I would say broadly, if you look at the profitability of the company, it has been growing on a year-on-year basis, and we should continue to grow year. The challenge and the concern for us is not the immediate period; it is more the longer term. And the impact of the tariffs, if you talk about it, will really be more in the third quarter and fourth quarter.
Okay.
Because that's kind of when it gets inverted there. So only when it gets inverted, the duty payment, all that happens. But broadly speaking, we see the year as one of growth, both in terms of top line and bottom line. Yeah, no, last year was the highest. Last year we actually spent about 250 crores on capex. And actually, if you look at the 250 crores, yes, we had a peak capex, but our debt was actually less than what it was in the previous year. So we've actually generated all of this through internal squeezing out working capital and internal generation. We've been able to increase our capex by 100 crores, which is significant. This year, maybe the capex is about 200 crores, and really, the whole issue of tariffs and other such items are. One is, of course, you can say impact in terms of business coming to you, or you can talk about impact in terms of profitability. But the bigger issue is actually one of uncertainty. So typically, you make investments when you have a surety. So for businessmen, it can be one way or the other, but at least if you have surety, then you know where you want to put your money. That clarity kind of comes about. So towards that, probably, the uncertainty of tariffs to a certain extent would limit capex till such time that these issues, at least that punitive duty issue, is kind of sorted out. See, the company has a four-pronged approach towards growth. One is we are a relatively recent entrant into cast aluminum wheels. So from that perspective, we are on the growth mode there, and we are enhancing capacity. We have currently capacities for 40,000 wheels a year. We'll be enhancing that. We'll be probably doubling that within the next 12 months or so. And that's really in line with projects that we are winning. Second area where we are expanding our capacity is really related to windmill related parts, where our partner is enhancing his casting capacity, and we are enhancing our machining capacity to align with that.
Who's your partner?
Bater, who's a Danish company that makes castings for the hub of a windmill. So we do the machining. So when they add their capacity on castings, we add machining capacity. So that's the second area where we are expanding capacity. Third area is, if you look at the broader arena and look at construction wheels and agriculture tractor wheels, where I said that we are the largest. If you look at tractor wheels outside India, look at the market outside India, we have maybe only about 7% of that market.
Okay.
So there we see a prospect to grow that to something substantially larger. And we've added a plant in Mambatu, which will basically make this wider range of tractors which are used in the rest of the world. So we should start winning new business on that from the second half of this year. We hope that the tractor wheels and the construction wheels is the third area where we hope to grow. Fourth area is really a question of having a low base in a new industry segment, which is on hydraulic cylinders, where the business is a fairly small 200 crore type of business. But we believe that we can build this up to be a global supply. The customers are the same as wheel customers. So we believe that as long as we work on improving our quality and our cost structure, we probably can be globally competitive in a couple of years. And we're also looking at a couple of ways of partnering companies so that we can ensure our growth in the coming period.